Ladies and gentlemen, welcome to the midday market madness. In today's video, we are going to be talking about this bleeding market. Currently, I'm looking at Chime, but the NASDAQ is down 1.5%. The S&P 500 down 1%. Now, this is a slight recovery from where we were before. I mean, very slight, but this was looking bad. Bad. Hopefully, we end up seeing a little bit of recovery, but some of these AI names, Broadcom, Oracle, the many other adjacent AI trades as well, NVIDIA, Micron, all of these names also not having the best of days either. So Micron down 5%, but it was a lot worse. We were under 240, now back to 245 on Micron. NVIDIA down 2.3%, 176. Guys, what is going on? Now, I was just looking at Chime, so I'll just tell you guys what I was just reading up on. Chime's down 3.3%, but this is just broader, market news. Obviously, I've been following this name for the last, little bit, ended up buying in. But Chime, I was going through the Reddit for Chime Financial, and I found something that for the lower end consumer, you guys, this is scary. Okay, back in March, Chime ended up announcing that they were going to start offering instant loans. Okay, small dollar loans, which they ended up stating were going to be $500 loans. No hidden fees, very easy to understand. They want their customers to understand what they're paying in terms of the interest rates. But the customers that they're entrusting with these small dollar loans are, still building up credit, still, have low account balances, all of these things. If you're asking for a very small dollar loan, it's usually because you're absolutely paycheck to paycheck. You're doing this for increased holiday spend to then pay back afterwards, stuff like this. However, I was going on and I saw this post, which was 5 months ago, but this was on Reddit. And it says, I just got offered a $1,000 loan just 2 days after paying off my $500 loan. First off, not a great look. Good if you're solely interested in Chime as a potential winner, but not good for consumer health. Now, why can't I make this a little bit bigger? It's not really letting me make this image bigger, but anyway, I can kind of just talk through what I'm looking at. You are pre-approved for up to $1,000, okay? There's a $1,000 loan. The loan is a 6-month term, and the total cost of the loan afterwards is $1,100. So for some people, they go, okay, $100 is not a lot. I'm a little confused by the APR. Maybe I'm an absolute idiot, but my understanding, they say the APR is 33.5%, but if you're paying $100 on $1,000, it's 10% in a 6-month time. So wouldn't the APR be a little around 20%? Maybe I'm confused there. Someone can maybe clarify that to me. But APR of 33.5% on this small dollar loan. Now I immediately see, people saying, ouch. And I agree. Whenever I saw this, I said, nope. Not taking that. That looks bad, But let's just here. Wait, how do I get back? Okay, so let's go back and take a look at this really quick because I thought this was absolutely crazy. Whenever you start scrolling through the comments, I need one. I don't have a $500 loan. Okay, immediately deposited. How do I get this feature? This person says, don't take out one. How do I apply for this? How can I get an offer for this? How can I get a loan instantly? How? It's crazy that there's this many customers that are going, please, how can I get a 33% APR loan? Chime offers loans now. So how do I get this? There's some people that are saying, hey, you know what? It's extremely high, but yeah, I don't know. Now, these, what's really interesting is Chime is going from a company that has essentially made money purely off of debit card transactions, right? Like payment fees. They're a payments company. However, payment companies don't make as much as lending companies, and lending companies that are making, 30% APRs can go gangbusters in growth if customers actually end up paying them back. Okay, that's sort of the key, the underwriting. However, I'm curious how you guys weigh the potential impact of these types of loans, what that means for small dollar accounts, if that's potentially helping out users or not. This is different than MyPay, which is actually a pretty interesting tool. They essentially, because they know that you have direct deposit and they know how much you're getting paid, they can actually front you your own paycheck much earlier, so then you can end up paying off your bills, and then they charge a very low amount. Okay, so that's a little bit different. They'll end up essentially giving you your own money in advance, and then they'll take it from your direct deposit. So the actual loss rate is extremely low, because the only way that you find a loss rate is if somehow you're expecting a direct deposit and then that direct deposit doesn't come through. Okay, that's not as common. So keep that in mind. But man, it is, I don't know, dangerous in my opinion to offer people that probably do not have as much financial education 33% APR loans. Yeah, I mean, it's kind of like a payday loan. You can definitely say that, but no hidden fees. They're not trying to do that. They're saying, hey, it's a 6-month loan. You're going to pay $1,100. Like, they're telling you exactly what you're paying, and then it's up to you to sort of decide on whether or not you want to take that. Okay. Okay, let's see what else the market is showing us today. I wanted to start off with a couple of videos from the market. Former TikTok CEO is saying that the battle for Warner Brothers Discovery is a must-win situation for Paramount. Let's go ahead and check this out. Oh, oops. Okay. I don't know why it's still so laggy. I don't know.
For consumers and good for Hollywood, and winners. Do have to pick a winner in the bidding war here for Warner Brothers Discovery. Who do you think it's going to be? And obviously you have a stake in this game because you're as a content creator, right, with Candle.
Yeah, we're content creators, and I think that it's never good for me if you're a creative and you do creative output in Hollywood. It's not good to see the the merging of buyers. In this case, Warner Brothers Discovery as a studio being a buyer of creative product or a commissioner of creative product. And it's not good to see another outlet like HBO Max being combined with either Paramount Plus or Netflix. These when buyers shrink, that's the problem. But I would say that the problem isn't really due to this combination that's coming up with either one. It's due to these headwinds that Hollywood is facing, two of which I just described. The lack of attention that younger people are paying to traditional Hollywood fare, the box office coming down, this pay TV declining. All these are the problems that are causing issues for creative output and for creative people such as myself that are in businesses. The effect is the merger, and so one of the things, which whoever wins is going to be interesting. I went through this when Disney bought 21st Century Fox. We had a signed definitive agreement, $52 billion. 6 months later, another Comcast comes in over the top, taking advantage of the fact that boards are obligated to consider higher bids in public company situations like this one. And then we ultimately won with the $38 bid and $19 billion more than we wanted to pay. There was a question mark throughout that process as to who was going to win that battle. It was going to be us or Comcast. We happened to win that. Here, it's not totally clear. I know Paramount has gas left in the tank. They've said so explicitly. I think David Ellison said this is not our best and final offer. There's a higher bid coming from them for sure. They're not going to end with just taking the same bid that didn't work with the board and taking that to the public shareholders. This bidding process is in the third inning, and it's going to continue to go. Who wins? I don't know. There's industrial logic that makes sense for both. For Paramount, it's more of a must-win situation, I think. I don't think the Ellisons went into that with the scale that of just a Paramount. They really need Warner Brothers. For Netflix, it's a really nice to have access to that content. There's that big, deep library and that production capability. I think the urgency is more on the Paramount side. Might that show up in how this plays out? It very well might.
Some of you guys are asking what I'm buying. I've purchased one thing today. However, that might not be the case by the end of the day. So far, I've only purchased Nebius, but I could be going in to buy more. The things that are really interesting me right now are the data center and AI names because they're taking such a huge hit. And I do not think that there's any sort of falter in the actual thesis. So Nebius is a name that I'm really interested. Obviously, Nvidia, I want to continue to be bullish on this name, but it's hard for me to buy whenever it already makes up for such a large percentage of my portfolio. But do I think it's undervalued here and probably one of the more undervalued names in my entire portfolio? Yes, but I don't know. Going over 50% in my portfolio in any name is something I really do not want to do, even if my conviction is sky high. It's just a matter of, if I get it wrong. That's always a possibility. I'm like, yeah. There is quite the candle on Nvidia right now. It does look like Chinese names are buying into the H200s, as Jensen Huang said that, they're looking to ramp up their H200 production. There might be a little bit more demand than they originally anticipated, which is obviously great. And then, there was also old news, like people said, oh, they just want to get the H200s. And the problem with them getting these H200s is that China is going to try to replicate these products. Well, it actually looks like there might be Blackwell chips that are already in the country. Supposedly China's DeepSeek that they're set to announce a new AI model was built on NVIDIA Blackwell chips that were smuggled into the country. That was news 2 or so days ago. But in terms of their ability to have a few, or I don't know how many, I couldn't even potentially guess how many chips were smuggled into the country. But do I think some have been? Yes. And if they were looking to reverse engineer, NVIDIA Blackwell chips, I'm sure it is already trying to be done. So the H200s are a definite downgrade from that. And I do believe that they should be sold into China. I'd rather, American tech superiority versus essentially any other country. SoFi pumping. Yeah, I mean, that's quite the V. I mean, here's the thing. And another thing that I wanted to talk about today, because I have been buying NVIDIA. How on earth is someone like don't bet against the Fed type situation? Don't bet against the administration. I don't understand what is even the bear case on SoFi going forward, especially at these prices. Like the growth rate is unbelievably high. They just raised a bunch of capital to accelerate that growth rate. That was a raise from a perspective of strength. They just got a rate cut. There's more rate cuts baked in for 2026 and 27. Okay. You have a bunch of CNBC and different analysts coming out saying that, financials are going to do well. What are our thoughts on the regional banks right now? SoFi, let's remember, they are a bank. They have a lot of room to potentially, benefit as being a part of the financial sector. So yeah, I know people are saying it's only up 1%, but we did end up touching 26.20 and then up to 27.40. So it is a pretty good, run, essentially up 4.5% from the bottom. The bear case is that they don't use that new capital wisely. I agree with you, but where in SoFi's history is that, the case? I would think that there's sort of two ways where you could say that they have maybe used their capital not as great as maybe they should have. And that was the acquisition of Galileo, and that was the acquisition of Technisys. Did they overpay for those names? It looks like it. Did they end up getting the growth and the cross-sell from them that they were expecting? Definitely not. So that's up for debate. But then Anthony Noto says that, a lot of the benefits from those companies are not just showing up in the P&L. Like they're able to run faster. And my video that I ended up dropping yesterday, like no one's watching the video. Maybe I did bad on the title. It's not a very exciting or idea of a video, but SoFi is putting out like a product a day right now. I mean, they are running so unbelievably fast. My only concern is that it's sort of all the things that they've been working on throughout the year, that they all have sort of timelines to get done before 2025. So we're all seeing them in December. And then like January, February, March, April, we're going to see nothing. That's sort of my concern. However, some of the new products that they've announced, so we're talking smart card, we're talking instant transfers. What was the other one? I got to bring up the list. But some of those new products are like direct, multi-accounts as well, individual accounts and joint accounts under one account name. All of those are huge indications that we are fully on Technisys's platform now. So that means that they're going to save essentially $70 million a year on paying other providers. They've probably canceled their deals with all the providers that offered them brokerage services and checking account services and lending platforms and stuff. We no longer need to pay them. We're on Technisys. All the payments are going to be done from Galileo themselves. So you're going to see a financial institution that has extremely high margins and improving margins over time because everything is built in-house. So if there is a use of capital for SoFi, if that's the bear case, it's that they do another acquisition that is misunderstood or that, might not yield a direct ROI. So that could definitely be the case. However, if they were to just do exactly what they're doing today, pour it back into loans with, high return on investment high return on equity, I should say, like lower their cost of funding, pay down their debts, and just continue to improve overall, I don't see how that's going to be a bad use of capital. Okay. Tanner, there will be, yes, no, of course, but I'm talking about things that we potentially have not been thinking of. Okay. SoFi needs to build on ETH. They are using Solana, but a lot of the big coins, the stable coins, are multi-chain. Look to PayPal USD, Circle, Tether. They're across many different platforms. So I think SoFi will also build across Ethereum as well, but we'll see. Okay. Along with that, actually, we saw a pretty interesting update from YouTube. So, YouTube's parent company, Google or Alphabet, ended up announcing that they are going to be allowing creators to get paid out via PayPal USD. Okay. YouTube themselves are not taking the stablecoin. They're not touching it, but they are going to pay it out. It's going to transfer into PayPal USD, allow for quicker transactions, lower costs for them. It's just starting to show up as the real use cases for PayPal USD as some of the biggest financial institutions, that some of the, companies with the largest amount of pay-in, payouts is now starting to see the benefits of stablecoins. These are not small companies. This is YouTube, guys. So right now, it's only in the United States, so I can't take PayPal USD as payment, or else I would as a YouTuber, right? But works across PayPal and Venmo. It's going to be fully handled by PayPal, so YouTube never actually touches the crypto, and it's going to help for much cheaper and faster payments. All right. I think that this is going to happen across the entire space. And I don't know. Payments is such a massive industry and people play it down all the time. And I think stablecoin is going to see a massive, massive increase. People are talking about, we've gone from 300 billion to 310 billion in stablecoin holdings to 320 potentially one day. I think we're going to be in trillions soon. And that difference, the 10xing, the 20xing in this sort of a field is where I think a lot of the gains are going to be seen from Ethereum, Solana, a lot of the fintech names, a lot of the actual e-commerce names and the companies that are actually dealing in these payments that see that margin benefit, right? So that I think is important. Did I see the Diddy documentary? I did. Have you guys seen the full thing? Like, can I talk about it? Some of those groups I didn't know, but there was that two female group. One of the ladies' names was Dawn, and then I don't remember the other name, but that lady that defended Diddy was pretty interesting. I'm actually surprised that 50 Cent actually added that part in. But yeah, anyway. Amazing documentary. The Reckoning or something like this. Okay. Rivian up 15%, 1891. Lululemon up 10.5%. The VIX is also up 6.5%. Navan up 4.3. Chipotle up 4. Yeah, pretty interesting. I got to do more looking into on Navan. Another one that people continuously ask me to look into is Sezzle. I have not looked into it, but I didn't realize that the market cap was only 2.4 billion, and some of the multiples look really interesting as well. PE of 22 times, forward PE of like 17, 18 times. I don't know. I might need to look into that one. I think Investing for Freedom, I got to give him the shout out there. Yoga pants are up. I wear a lot of Lululemon, ladies and gentlemen. I'm not here to let the allegations fly or whatever, but Lululemon makes probably the greatest male clothing I've ever worn. I'm not wearing any right now, but you'll notice when I'm wearing it. I'm loose, I'm moving, I'm feeling great. I'm not overheating, True, yeah. Only real people know this. Okay, you get a pair of ABC pants, it's gonna change your whole life. Gross? That's because you've never tried it. I'm getting past the stigma. Real men know the ABC pants are where it's at. You can go to a wedding in those yoga pants. I mean, it's phenomenal. No, it's not leggings. They look like dress pants, but they're just really stretchy. Okay. Goldman Sachs. Oh, wait, no, that's not news. Let's see here. Some people are saying there's Oracle news, like new Oracle news. Like in the last couple minutes, Oracle news. Oracle stock rebounds. Yeah. Yep. Okay. Let's see. Oracle stock rebounds as the company says there's no delays required to meet their contractual commitments. The market is highly on edge, waiting for just about any highlight or headline to call AI a bubble. Ignore the noise. I 100% agree with this statement, by the way. The market wants to hate artificial intelligence so badly. They want to pin this as sort of a .com bubble, anything along these lines. Like the trailing PE on NVIDIA is less than 44 times. And people were here, wait, let's bring this up. Let's see what the forward PE is on NVIDIA. And that's assuming that the forward PE even comes true. Okay, so that's another thing. Like, some of these billings, some of these sort of forward assessments of these businesses is only true if those companies continue to pay. If they say, hey, you know what, we're actually going to cancel these contracts. We're going to pay our breaking fees, our breakup fees, and we do not want to buy hundreds of billions of dollars worth of chips. Well, then that ends the theory. But that's not what any single one of these businesses is saying so far. And people are grasping at straws. And honestly, I think it's like almost like a hedge fund attack or institutional propaganda trying to bring down these trades so then they can get in at cheaper prices. Like, we're looking at a bunch of companies that are accelerating growth and margin. Oracle, I'm not talking about, obviously. They're going head on into spending a lot more. It's impacting their free cash flow. But NVIDIA is the beneficiary of their free cash flow being impacted. And then people are selling it off. Like we're cheaper now than we have been for quarters. I don't get it, man. I do not get it. We've seen multiple earnings results during this entire, sort of waiting stagnant period. And then anytime Jensen speaks, the stock rockets up because they realize that it's real. And then we let this propaganda rip us back down under 180. And Nebius, I'm bullish on, because I think, you know what, there might be delays on other companies' data centers or something like this. Like, there is a company that's setting up data centers and oversubscribed for their amount of capacity. I just don't understand how they are going to sell less than 100% of everything that they end up setting up. And I don't know how I bet against that. They're fast moving. It's going to be a high margin business, in my opinion. We've seen that, like we're acting like cloud's a new space or something. It's just going to accelerated compute. So less CPUs, a lot more GPUs, and NVIDIA is here to benefit. And I think a lot of the big cloud names are here to benefit as well. I'm betting on Google, Amazon. I'm not currently betting on Microsoft, but I would not bet against them. Give me Palantir over NVIDIA. I don't see how that's the trade. Like, if we are, and I'm not bashing Palantir. I think they're going to do absolutely fine. But like, if you are talking about multiples that could be in bubble territory, you're talking about a business that has a 431 times price to earnings. If you're talking about like legitimately, like, what happened? What did I change? Did anyone see what I just clicked? Where's my... Okay. Anyway, if you're talking about a business, 432 times PE, like, this could potentially be bubble territory. And I'm not even saying it is. Like, I think they're growing really, really well, and their multiples are improving, and the rule of 40 is phenomenal. Okay. But who also has an extremely high rule of 40? Essentially, the only one that's actually keeping up with Palantir, and is 1/10 the cost. Tell me, what name is that? That's NVIDIA, ladies and gentlemen. That's all I see. And I'm not saying that they're bad. Both can be fantastic. Okay. They probably, like, I think, you know what? Michael Burry, I almost said Michael Saylor. Michael Burry, I think, picked literally the worst two names. They have, oh yeah, what's going on? Yeah, what did I do? Okay, there we go. I think I messed something up, because, yeah, the price said it was like $14. $185, 431 times PE, a 67 times price to book. And what's their forward PE? What's their 2028 forward PE? Like, let's really look out. Their 2028 PE is 97 times, 97.5 times. Guys, that's too high for me. 97.5 times. That's double what you're paying for NVIDIA today. VG is $6.31. Incredible. I don't buy names that I don't know anything about. But boy, oh boy. Wait, why is my... Honestly, what is going on? I feel like my stream is breaking again. VG 631. I know Amit bought VG, but he also said that he didn't know anything about it and that he's trusting Matt and Chris. But I just don't buy stocks that way. When Cecil deep dive? Dude, I gave you credit at the beginning of the stream. I'll look into it. Yeah, this is another thing. Coinbase, December 17th, which is their next sort of product announcement, is set to unveil prediction markets and tokenized stock purchasing. Okay. That's another big thing. Their L2 is Base, which is built on Ethereum. Coinbase is, one of the biggest exchanges, one of the prime time names in the crypto space, and they're bringing probably the two biggest products that are being built on crypto to their platform. Prediction markets and tokenized stocks. I have some Coinbase. I don't even have Coinbase, to be honest, but I don't bash the company. I'm not anti it. I think it's fine. Okay. When's Santa showing up? Who knows? Who does know these days? The SPY is now down 0.8%. The NASDAQ still down 1.2%. AVGO, Broadcom down 10.5%. Yeah, pretty crazy. So this is what Oracle just recently said, that the site selection and delivery timelines for OpenAI data centers were set jointly with OpenAI. There's no delays to any sites. All milestones are still on track. Good. Everything is one big hit piece going against the AI trade. I mean, it's incredible. And initially, this is another thing that no one seems to be talking about either. It's like, whenever you how do I say this? The $1.4 trillion in spend, for the most part, I can't think of one. None of those had timelines on them. The NVIDIA deal, the AMD deal, the Broadcom deal, all of these ones just said, for a specific amount of time into the future. And then people just sort of set their own expectations. So now people are coming in, they're saying, hey, this is sort of going to be built across 2027, 28, maybe even 2029. And now people are like, sell it. It's like, bro, I mean, how did you think they were coming up with 1.4 trillion? You need to give them a little bit of time. So Bloomberg lied and destroyed billions in shareholder value. Well, it could have been there, like, I don't know. Not everything's black and white. They could have been, like, that's what their source could have said. Who knows? Didn't the Fed turn back on the printers today? Yeah, December 12th. This is the start, running all the way through January. The not QE. But those are not, like, we even got AI clarity. David Sachs essentially saying that, and Trump signed the executive orders to not have each individual state set their own AI regulations. And in fact, that's going to be set at a federal level, which is going to hopefully allow to sort of deregulate a little bit, like making sure about things like child safety and stuff like this, but also allowing private companies to run their own businesses. We don't even know what AI is yet. And yet there are some institutions that are trying to set parameter limits and like regulate models and stuff. It's like we are nascent in this business. Like imagine as the internet is getting started going, oh, you know, we're actually going to set RAM limits and make sure that I can't think of a great example, but putting limits on the internet space in the 1990s. It's like, what are we talking about? Like, we don't even know what it's going to be yet. And there has been, you're right, there has definitely been some states that are trying to make sure that companies are not, or that are putting in some sort of ideology behind those models and their answers. But it's even hard for those companies to, like OpenAI doesn't even know how to, what do you call it? Like agree or follow the rules on those, because the companies that are using their product, like the enterprises, still have to follow the law. So OpenAI has to govern how these companies are using their product, which should also just be following the law anyways. Like it doesn't, like it all just doesn't really add up. We're way too early into this space. And I think that David Sachs is just trying to say, hey, let these companies figure it out and we'll make sure that children don't get hurt in the process. Maybe that's a, you know, we'll see how that sort of pans out. But another thing is freer banking regulations. This is another thing that Scott Bessent's trying to push into. I just don't understand how the market is dying to be so bearish whenever everything that got markets to be excited in the first place is coming true. Lowered regulations, you know, less strict monetary policy, allowing companies to borrow at cheaper costs. All the sort of macro overarching like tide is raising. It's making it easier for companies to succeed. Any interest in the Wealthfront IPO? So I did have this video I wanted to watch. I haven't seen it myself, but what's also interesting about the Wealthfront case, which I think, we'll listen to this video and the multiple that they're potentially looking to get in at, but it's also a good comp for Chime, because Chime is also looking to enter into investment products, and they will probably end up going with a robo-advisor as well. Let's take a look.
Fintech platform Wealthfront going public on the NASDAQ today under the ticker symbol WLTH. It priced its IPO at $14 per share. That was the top end of the expected range. Joining us now, first on CNBC, is Wealthfront CEO David Fortunato. David, good to see you.
Thanks for having me.
Big day for you. I was saying we kind of remember this industry, as we used to call it, the robo-advisor industry, the sort of automated investment services from 15 years ago. Well, at the time, it seemed like, hey, this is the next thing, right? Because it's going to do a lot of the things for you. Talk about where Wealthfront sits in the business now and what your customer profile is. I mean, obviously, the Schwabs, the Vanguards offer similar things. Where do you fit?
Yeah, so we serve more than 1.3 million customers across a range of products. So savings, investing, borrowing, and planning. Really what's happened over the last 15 years is that we've grown with our clients as they've grown. So when we were getting started 15, 16 years ago, it was a lot of 22-year-old software engineers. And now it's a lot of mid-30s, early 40s software engineers and a much more diverse range of careers. We try to meet all of their financial needs, and we've grown with them over time.
In fact, I remember that the company used to talk about how clients were a huge percentage of like Twitter's employees or something. So like a lot of employee stock option wealth was there. A few years ago, you had a deal to be sold to UBS. The deal didn't go through. I guess at that point, you had some kind of sense that maybe as part of a larger institution, you could do more. Where do you sit now as you're going to be an independent competitor, or still are?
Yeah, I mean, I think we'll look back on that deal, and the breakup of that deal is one of the best things that's ever happened to us. Right. It was a tough process at the time to get through, but we talked to the company. We talked about the road we had ahead. We knew we'd be profitable a month or two after the deal broke up. We've been profitable since then, grown our EBITDA margins to more than 40% every month since then. We've really focused on building a sustainable long-term company that can grow with our clients. And, I think that deal helped us build the maturity that we needed to get to and where we are today.
One of the talking points I recall from back, let's say in the early 2010s, was that generation, the younger investors that were just getting into it, they bought into the low-cost indexing philosophy, right? Burton Malkiel was like,
Our
part
chief
of the
investment
founding
officer.
chief investment officer. So this efficient market theory, in other words, they sort of got it that maybe that those long-term principles made sense. We now have a market where like Robinhood has a $100 billion market cap because of high turnover, low cost trading. So, I mean, has the market changed in terms of the customer needs or desires?
Well, the last time I talked to Bert, he's still writing articles about how long-term, diversified, tax-efficient investing is the best way to invest. And I think the data supports him. There are people that want to speculate and want to trade a lot. Those aren't our clients. Those aren't who we attract. And there's a lot of people with a lot of money that are growing their wealth quickly through passive investing.
Look, I agree with you. I think that is the best way to invest. Everything else feels a little like gambling instead of investing. But you do have this much younger generation. You guys used to have the youngest generation. There are cohorts behind them that maybe aren't as steeped in that same school of thinking, that buy and hold is the way to do it.
Yeah, our median client age joining the platform over the last few years is 23, 24 years old.
So they do exist.
They do exist. They're a little quieter than the folks that are more interested in speculation, but also they're focused on their families, they're focused on their careers, they're focused on building their lives. And so they spend a little bit less time being interested in the market.
And you're okay with that. That's the clientele you want. You're not looking to add a bunch of bells and whistles to make things look sexier, to make it look faster for any of this stuff.
I think that's exactly right. We're focused on building for the long term, and we're focused on serving more of their use cases over time.
What is the advantage? I know you guys, in all of your materials talk about being kind of a tech platform first, as opposed to kind of coming out of finance. How does that practically matter to a customer, to the experience, to the kind of services you offer?
If you look at the products that a 20, 30, early 40-year-old wants, across their entire lives, they want digital products that work on their phone. They work the same at midnight as they do at noon. They want a great digital experience. They want it to be fast and easy to use. And that's true for how they get their groceries, and it's true for how they get their finances. And so we're trying to deliver a product experience that makes them feel comfortable and ultimately confident in building their financial futures.
Yeah. Until I see some actual, I know the S1 did come out. I'm just not interested enough to go and see what's going on. Also, they're priced at a 16 times PE on IPO day, flat on IPO day. So I'd like to see the growth rates and everything. Maybe we'll listen to the earnings whenever that does end up dropping. Worth maybe keeping an eye on, but only a $2 billion company. I'm curious what they do differently to SoFi on the robo side. I'm sure there is some things, but yeah. Yeah, I didn't think it was a very good sales pitch either. Yeah, I mean, we like customers that don't really care about our product. Sort of a set it and forget it. That's the quality products that we're... And I mean, to be honest, that is what a robo-advisor should be, but it is not that great of a pitch. That's for sure. Okay. Let's see what else the people are saying. Bought any dips here? Like I said, Nebius was the only dip that I ended up buying. Yeah. Okay. What about Cash Coach? Did they just do an update on it or something? SoFi literally is putting out a product a day right now. So I could not, I could definitely believe that ended up just getting pushed out. There was this product announcement from Lightspark, which we already know about, but they end up highlighting, why SoFi is a better way to pay than any of these other institutions. And honestly, it's true. I find it very exciting. Like the rate that, SoFi is charging to send $50, to send $100, $300, whatever. You can't do this at Remitly, Wise, PayPal. Like SoFi, just your average bank, the company that you wouldn't even necessarily go to for those types of products, has the best payment option right now. The only problem is it's small dollar right now. But that's super easy to change. You know, the part that's holding them back is not the size of the transaction. Will SoFi buy Kalshi? They can't afford Kalshi. Kalshi's moving extremely fast. I think in their last valuation round, they're $11 billion. They would not sell the full business for less than, probably like 20, 25 billion. So I sure hope SoFi does not go anywhere near that acquisition. By the way, though, they are expanding. Like Kalshi is partnering with every single business. I just saw a new partnership today with Phantom, like the Phantom crypto wallet and Kalshi, to allow for those types of products directly in app. Let's see what else. I also wanted to highlight this. Nubank is another name that we look at often. Okay. Sorry, one sec. I think I need to sign in. See, I ended up switching over to Chrome, so now I've got to sign back into everything. But Google, super helpful. 2 clicks to get back on your apps. Okay. Nubank, across all analysts, has an upside of only 10%, but $18.60. The most recent upgrades, however, that came in, sort of this month, has been a $22 price target, $18.40 price target, and a $21 price target. 30% upside, 9% upside, 24% upside. Those were the new additions in December. Onward and upward for Nubank. It's not one of these explosive names. We're not really looking for a massive catalyst that's going to end up tripling the business. But for me, I'm looking for a percentage of my portfolio to just say, okay, which company on a year-over-year basis is always going to outperform the S&P 500? And I've got full belief that that's the case for Nubank. Tanner, curious what your average on Nebius is now. I can check. It's not anything crazy. It's going to be in the 80s. Like high 80s probably, because that's where I've been buying, is high 80s and 90s. I didn't buy before that. I'm not like an early investor in Nebius. My average is 89.68. So I saw it under that today. I had some cash. We bought. I like Nubank, but ended up buying SoFi. That's perfectly fine. I like them both. Yeah, I think they're both great. Just went public. Yeah, so we just did cover Wealthfront. I don't really have any thoughts on it just yet. I'm sure I'll be following it and putting it in my fintech list, but I don't have any comments on it right now. Yeah. Okay, let's get back into some of the comments from Big Wall Street. Anything in here that's exciting? Virginia company on $700 million investment from Korean-based company. Micron, Palo Alto Networks, Adobe, and Vertiv Holdings. Yeah, let's check that out. Let's see what's going on. Or actually, no, never mind. Fresh AI jitters shake the market. Yeah, let's check this out really quick. Because it really is shaking the market. And it's so freaking funny in my opinion. Like, are the people who are super bearish, like, are you guys not using AI? Like, do you not see it creating tasks for you that it can do itself, or taking over your browser and running tasks? You can't see that on a business perspective, that they could run manual tasks, and sort of silicon capital would be a lot cheaper than human capital, meaning sort of the lower end of the pay range, the people who are not actually using their brains to do work, but just instead doing a similar task every single day without thinking about it, that those jobs are not going to be automated? And what does that mean across the many, many millions of businesses that are doing trillions of dollars of, payments each and every year to then see, faster spend, quicker payments, cheaper costs of payments via stablecoin, automated tasks, faster time to new products as AI is actually an amazing coder. What does that mean for logistics businesses to get full self-driving or robots behind there as well? Like, I don't know how you get bearish in a time like this. The only thing that I could see, I think a lot of people think that, the market is priced for perfection. So if anything goes wrong, everything comes down. It's like, dude, the market is not pricing NVIDIA for perfection. Look at the same, the growth on NVIDIA is the same as the growth on Palantir, and one has 10 times the PE. One is priced for perfection, and one is assumed to have competition. And we've not yet to see that competition. Their growth is accelerating. Their margins are accelerating. That's the opposite of price for protection. That's price for pessimism. That's priced for, hey, competition's going to come and eat their lunch. That's crazy to me. I don't believe in the idea of growth versus value. I mean, you can look at all companies the same. What's it worth to buy a business that's growing versus what's it worth to buy a business that is defensive? Growth has outdone value investing over the last 20 years because technology is at a faster rate of innovation. There's new things popping up these days, Okay. You can't keep NVIDIA down for long, don't worry. I mean, I'm not sure. Like where's NVIDIA going to be if they continue to grow this rate? Like right now it's at 42 times. People are saying that's expensive, but historically a company trading at 35 times is still expensive. It's not expensive for a company growing at 60+%, but Google will beat NVIDIA. Good luck with that. Like, you mean in total shareholder return? I mean, I'm betting on Google as well, but let's be real here. This TPU talk is it's funny. I will full port on Google soon. What are you waiting for? You're waiting for it to be more expensive? They're eating NVIDIA's lunch. Okay. Jensen saying China is a nanosecond behind them says a lot. That does not say what he's trying to say. I think people misunderstood what he's trying to say. Companies with extremely strong so this is a case across all markets. Okay. Companies that say they have extremely strong moats and are defensible and all of these things usually do not have as strong a moats as what you would want them to believe. The companies that have extremely strong moats, that antitrust lawsuits and a bunch of lawsuits trying to tear down their business, they are trying to talk down their business. Okay. You see that from Visa, MasterCard. You've seen it from Microsoft. You've seen it from Google. You've seen it from all these different businesses that go, hey, yeah, I mean, our company is nanoseconds away from being beaten. Yes, we're winning right now, but that you can't punish capitalism for winning. Customers are choosing us. That is what Jensen's saying. He's trying to get Trump to give them every benefit of the doubt. I guarantee you guys, Jensen was on the JRE, and there were a bunch of people going, oh, the first 10 minutes was an absolute Trump fest. It was super mega, yada, yada, yada. If Kamala Harris won the election, it would have been the biggest Kamala Harris parade that Jensen's ever put on. The dude is being apolitical. This is the same guy that went to China and said, China is one of our best clients. We've been in China for 30 years. We'll be in them for another 30 years. And then he goes over to America and goes, we need to make sure that China does not win. American tech superiority is the prime, they're the prime winner. Okay. He is playing his cards perfectly. So whenever he's saying that China is nanoseconds behind them, he's saying, hey, American government, give us some support. Let us sell into China. Let us bring you back tax revenue. Let us build, more. Give us all the permits as fast as you can. Give us, a federal ruling on artificial intelligence so then the companies that we're supplying chips to can build faster. Give them real, clear rules. He's not saying, oh, you know what? We're losing. What CEO comes out and says we're losing? He's saying this because he's winning and he can't say, hey, we have a moat and we're dominating, so let us continue to do that by giving us a regulatory push as well. That never works. He needs to downplay his position to continue to win. Look at the numbers that he's putting up, guys. Look at the note. He's accelerating growth. This is a $4.5 trillion business. They were a $5 trillion business not long ago. They're growing at 60+%. They did more revenue than Facebook. And, 2 years ago, they were a blip on Facebook's map. Okay. They are going to get past $100 billion in revenue. They're on track to do $500 billion over the next 5 quarters. What lunch is being eaten? Who is taking their place? Nobody. Listen to the numbers. He's an amazing businessman. He's positioning himself to continue to win, and by that, he has to talk down his pride to win the bigger war. That says a lot. Let's go ahead and listen to this video.
We did have an extension of the record high for the Dow off the open today, but as you can see now, it's a wholly different picture. There's the intraday look, and we just showed you the other major averages, which have all gone decidedly red, especially the NASDAQ. Let's show that because that's where the pain really is. That headline that Oracle is delaying some of its data centers for OpenAI to 2028 from 2027. The delays are said to be largely due to labor and materials, but a delay is a delay. And frankly, anything that calls into question the pace of the build out or the return on the investment is going to make this market skittish. And there it is, front and center in your face today of what that looks like.
Yeah, and I agree with that. And particularly when multiples are at levels that are assuming that you're going to get a quicker return. Look, the reality is, we just sold an electrical contract that works primarily in data centers for 4 times what we paid for it just 2 years ago. Now there's some M&A that drove that, and that's because of the scarcity for skilled labor. So that is factual. It is also factual that this delays the return on the investment. So you're absolutely right. So companies like Oracle should be down. Companies like what we're seeing, across the board, the energy companies, so GE, Vernova, et cetera. However, if people sold Meta because of their CapEx, this should be attractive to them, because they're delaying the spending, and by that time, you'll be able to see if there will be a return on the investment. So I would use it as a buying opportunity. I did use it for trade, and it's going to be a quick trade, buying the Qs here.
Just to put this out into perspective, this was delayed before Oracle had made the response that said that nothing is delayed. Just to clarify. But anyway.
Just
on this sell-off?
On this sell-off, because I think it's wildly overdone. Really speaks to the nervousness in the market, the nervousness about AI, which we saw in Broadcom, which I thought was a really good quarter, and I don't own it. So it's more emotional than factual at this point.
I mean, there's just so many questions. If you're delaying something, Brenda, until 2028, is the demand still going to be there in 2028? Are we going to have overbuilt already by 2028? You're just unable to answer any of these questions. Not you, but us, right? You just don't know. But there's enough skittishness in this market about the AI trade in general that an announcement like this or even a report like this is going to show up pretty dramatically in the market.
Absolutely, and I think you're exactly right. Nobody knows the answer to those questions. And we talk to a lot of managers who who are private credit managers, for example, that are leery of doing any lending as it relates to data centers, because there's just a big question about what the long-term outlook is for those facilities and whether all of the capacity we think we're going to need now is really going to be needed in the future. So I think having a moment like this and taking a little bit of the wind out of the sails of some of the AI trade is a healthy development, because I think we don't want to get ahead of ourselves, but there's no doubt that this is a huge wave of technological innovation that's going to change a lot of things. But when we think about all of the CapEx and the infrastructure layer, I don't think we want to do a repeat of the telecom build out that happened in the late 90s that then took years to absorb that capacity.
You just don't know whether you're going to repeat that or not until you do. That's the problem with a sea change like this, and when you do a build out like this, you just don't know what's what until perhaps it is too late. I'll come back to the table in a minute, but I want to bring in Seema Modi's been following this Oracle story from the get-go.
It's just a gully. I like that a lot. It's just a gully. That's all it is. We're in a little bit of a gully. Yeah, I mean, this sort of overspend infrastructure idea, obviously, I think a lot of people are thinking history is repeating itself right now, but we're not seeing any bit of overspend at all. I mean, every last bit of the capacity that is set up is immediately sold. So we're not seeing any inkling. Now, I wanted to highlight something after my tirade. That John here said that I'm interpreting all these things in the most charitable way. Well, the reason I am is like, if Alex Chris of PayPal is saying everything's going smoothly and we are doing everything to our best degree and we're going to turn around the ship, but we watch them go from 9% year over year growth down to guiding for 2 to 5% or something like this, and for Q4, it's like, well, then I'm really doing this in the most charitable way. Like I'm not looking at the numbers, but instead I'm looking at his words and trusting the words over the actual statistics. You can just see by the growth that PayPal has not been growing as fast as the e-commerce market, that there's been other names in the space that have grown faster than them, which means that they're losing market share versus, a lot of the players that are in the space. A lot of that would be me sort of coping or taking Alex Chris in the most charitable way. Happens. But I'm not taking Jensen's words in the most charitable way. I mean, I think that the growth is fully holding up, and we've seen nothing, like legitimately nothing to show the opposite. A couple of these deals where OpenAI can go to AMD, get paid in AMD shares, and then people go, oh, NVIDIA's done. It's like, what are we talking about? Why don't we actually see a data center be set up and then we can start discussing their loss in market share? But like, so far, we've not seen any deterioration in NVIDIA's market position other than China, and for which their full guidance is interpreting zero Chinese growth, which after the report today is not going to be the case because they're still they're seeing a lot of demand for the H200s. I don't think that the market is being as charitable as possible. I might, like, I'm a super bull, guys. I think this company under 220 right now is like flashing red lights. Like, I'm like, what is the market not seeing? And I did this during DeepSeek as well. Whenever it fell down to 100, or not even, it fell down to like $88. I was like, is the market insane? And then there were a lot of people saying, this is going bust. You're completely wrong. I see this every single time. And I'm aware there's some trolls that try to get me as well. But just because there's a sell-off doesn't mean that there's anything fundamental. And I look at the fundamentals much more than I look at the headlines. And I don't think enough people do that. And so I am trusting what Jensen's saying, but I'm not seeing anything to the contrary just yet. Okay. Okay, thanks for the reaction. No problem. Is this an okay entry for Nebius? I mean, I personally, for my own portfolio, it is. But yeah. We love Triggered Tanner. Yeah, I got some comments yesterday because there was somebody from some place in Canada that I was roasting about. You know, I said that he wasn't Canadian or something because he wasn't from Toronto. I'm joking, okay? I listened back and it's like my tone doesn't even seem that jokey. I just seem like I'm screaming. So I apologize. I've got nothing to blame it on. I'm like, what? Is my Canadian or is my tone Canadian or something? Like, no, it's the complete opposite. But yeah, I'm just having fun. Okay. Seems like SMCI is ready for X amount of NVIDIA products. Then they only get about half or a quarter of what's expected. I think that's SMCI bulls that expect those levels. I am not expecting SMCI to see some unbelievable amount of growth. I'm not investing in it. So, yeah. Are you Canadian? Yes. Only real Canadians come from Quebec. All right. You guys are like the Fed governors that are trying to dissent. You guys don't even want to be here. You're calling yourself the real Canadians. My dad's from Quebec, and I don't even like the way he says poutine. He says poutine. I don't care for it. So just a general weirdness about Quebec, just because of that. That's it. I'm from Toronto. Am I a Toronto man's? No, but I can understand the language for sure. You are the 51st state, so technically you're American. I don't own any quantum stocks. I'm not necessarily bullish on quantum. I think it's a real thing. I just don't know what the use cases are going to be. I don't necessarily believe in the quantum internet stack or whatever IonQ CEO wants to talk about it, them beating GPUs and stuff. If I don't see, yeah, I don't know. I'm not seeing any investment from any of the big tech names. They all seem to ignore the quantum space. They're putting this towards a little bit of research spend for Microsoft and IBM and Google. But yeah, I'm not really seeing any real use case other than like research. Could be wrong. Okay. I'm from the GTA also. Nice. That's the greater Toronto area for those that think that he's saying Grand Theft Auto. Okay. Where do you think Amazon will be next year? I'm not 100% sure, but I couldn't tell you an actual price. But I think that Amazon is in a really great place. I think that Andy Jassy is the right guy to run it right now. Every single technological advancement benefits Amazon, and I like that. I like where full self-driving is headed. All the comments from Tesla and Waymo and all of these places, they're getting, a lot of approvals to enter into states fully autonomously, especially on Waymo's side. That's going to benefit things like package deliveries and, what Amazon's doing. Potentially drone technology is going to benefit them. Stablecoins are going to benefit them. Artificial intelligence, robotics, everything. So big fan of Amazon. And another thing is, whenever you're talking about robotics companies, they have like 1 million robots that are in use today. It's probably higher than that now, but like some companies talk about robotics, other companies are in the space working, and Amazon's a sneaky little player. Besides Robotaxi, Uber is the only one with the app, software, and build out their own self-driving platform off of. Well, I don't know if they're going to own the vehicles as much, but I would say that Uber's benefit is the customers. And you guys obviously know some of the things that I've been really, by the way, Wealthfront is up 4% now. They were flat on the day, but they've jumped up to up 4%. One of the things that I've been really, really interested in is who owns the user on a lot of the companies that I'm investing in. So that's led me into new investments like, well, one, Amazon, but Meta, Reddit, SoFi, Nubank. Rather than financial technology businesses selling the technology, the companies that actually have the user, I think, is going to win. I think AI might change a lot of, third-party technologies and stuff. You hear Chamath talk about that with, what is it, 80-20, 90-10, whatever the name of his business is, where they're essentially saying that AI is going to be such a breakthrough that a lot of companies are going to be able to build technologies that they've paid for previously, and build them in-house. So I want to make sure that I'm buying the businesses that actually have the user. Looks like Waymo's blowing Robotaxi out of the water. Elon better hurry. I think that's very early to call. Right now, Waymo is on the roads, but the second that the Tesla Robotaxi is going to be a light switch moment. They're going to go from 0 to 1 million overnight. When that happens, I don't know, but that's sort of the idea. Is that they already have all the cars on the road. They're just not turned on. They're like sleeper agents. 80-90. Thank you. Let's see. Is Amcor something I'm looking at? No, not really. Unfortunately. Bought SoFi dip, $30 calls for March, added to my position, which is now 250 contracts. I'm dying over here. Yeah, I mean, you're right to play the options market. I'm definitely not buying options. I'm also not selling options here for SoFi just because I think that we are going to see such a pop. But yeah, it is been getting hit a lot ever since earnings. Like earnings, we have to remember, like we went into earnings at like $32. And then SoFi does SoFi things, dragging them back down to 27. Just crazy. Financial Times Person of the Year was Jensen Huang, ladies and gentlemen. Reshaping the global economy. Pretty interesting. They're also going to be at CES. Next GTC, all these different things. So we'll see Jensen end up talking more about their business going forward. I think CES is early January. So they might be unveiling some pretty fun things there as well. That's probably the next big announcement that we're going to see. But yeah, pretty much all done on earnings this season. We'll start back up January 15th or so. That should be when JP Morgan and some of those big banks, Bank of America, all start announcing, and then that sort of kicks us off again. SoFi should be very early as well, probably January 28th, something like that. SoFi is a great trading stock. The problem is that whenever it does move, it moves a lot. And if you're trading it and have sold your position, then that can really hurt. Like, if I'm not mistaken, I'm going to call you out a little bit, Express. Didn't you trim half your position at 22? Because we had ran up so much that people were trimming their position. So we've been sort of stagnant a little bit, but that walk up from $8.60, and that was another thing too. We were in this sort of range for so long, this $7 to $9 range, and then there would be these times where it'd pop up to 11, and then right back down, and then pop up to 10.60, and then right back down. And so people got in this rhythm that anytime that it broke double digits, that was a sell. There were a couple of these pops, and people got used to trading it. But then if you miss these like actual ramp ups, Well, that is a much larger devastation to miss these massive changes. That too, right? We popped up to 18, ended up falling all the way back. People thought, oh, you know, we're headed back down to 4. Didn't happen. The memory on this guy. Oh, I just see some of your comments. Okay. Oh, dude, I'm not calling him out. I sell half all the time and I keep half. Yeah, but if you sell half twice in a row, aren't you down to 25%, then 12.5%? You know, like you keep going down, you're just holding less and less. I don't know. I'm not trying to grill, dude. If I am not grilling, I'm just saying why I'm anti that strategy. A lot of people make a lot more money than me. You know, people could say, Tanner, why are you holding just pure shares? Like you could have bought Leaps and made this much extra money. Like you can roast me all you want. I caught 12 to 27. It was great. I'm not coming back because of the way that they handle dilution. That's fair. I will see you back, though. You're going to rebuy. You're going to rebuy. This management's phenomenal. And, you know, if there's one thing that I can really highlight, like, whenever you find a good name, double down on those names. You know, I was listening to Amit this morning, and he was had some cash, so he ended up going out and buying Robinhood. I think he bought Nvidia. I think he bought. Did he buy Maybe he didn't buy SoFi, but he bought a couple of these names. Grab, I think. Now he bought VG as well. Before he ended up saying that he bought VG, I ended up commenting in the chat. I was like, "You're a great role model." And then he said, well, I'm buying, you know, this name that I know nothing about. And I was like, okay, well, he also bought Nebius. But like, before he bought VG, I was like, what an amazing investor Amit is. He's buying everything that he knows, that he already has the conviction, the due diligence, and he likes the price. And we're end up seeing a dip, and he thinks that fundamentally those businesses hasn't changed. Now, I'm not anti-VG, and I'm not saying that they're going to do good or bad, but he specifically said he doesn't follow the company. And I just don't think out of principle that you should buy things that you're not following. But I love the fact, like one of the things I've learned so much from Amit, and he called me, he said, when's the last time you bought SoFi? And I was like, you know, this was, I think the stock was like $17 or something. He's like, when's the last time you bought SoFi? And I was like, $13 or $11, something like that. And he goes, where do you think it's going? I was like, oh, this company's going to 45. Like this is like, we're going to continue to climb up. He goes, well, then you need to buy more. Like you need to double down on the things that you have high conviction in. And I was like, but I had anchor bias. You know, my average was $7. So that can be really hard. I know people that will buy companies. This is true too. There's a lot of people that do this. I do not do this. Okay. I'm immune. No, I'm kidding. But I do not do this. Where they will open up a new account to buy into a stock that they already hold, so then it doesn't affect their average on that account. So then that account has that same average, and that is not affected. I mean, do you? If that's what it's got to take, but like, for real, everyone wants to see that like you have a company that's like up like 20x and everything. But the real strength is having conviction, knowing that it was going to 20x. So you're wanting to buy it at, you know, whenever it was 20x position, a 19, a 16x, a 10x, a 5x, a 2x, all the way up. The flex is the share count. I mean, you can definitely say that. The real amount is how much money are you going to make? How long term is SoFi for you? Is this a retirement play for you, or just the next 30 years, or more of a short term play like 2 to 5 years? I don't know. You know what? If Anthony Noto is going to do what he says he's going to do, and I'm not just talking about the $1 trillion company, but he said that they're going to compound at 25% for decades. At what point during those decades would I sell? You know? So I don't really have, decisions like that. Like, I sort of re-underwrite my positions all the time. And so I'll say, hey, you know what? I want to hold on to SoFi today. Maybe that changes next year. But right now, I see no reason for me to get out. Do the math on 25% for 20. No. I get it. I get it. Trust me. But then also, like this is another thing about compounding. I always talk about companies that are accelerating growth because that's how you reprice businesses, right? Whenever you see more growth than they have previously, like Wall Street never anticipates that. Like, find me a company where they're saying that growth is going to accelerate. It's few and far between. And the companies that are doing that, like potentially Tesla, you end up seeing unbelievable valuations to begin with. But sometimes I have to look at SoFi and say NVIDIA and say, this company is growing at 60+% rates. Compound 60% for 3 years and tell me what you get. Like, it's such a fast growth rate that I think people have a hard time thinking about like what that's going to do to the fundamentals in a short period of time, let alone 25% over 10 years or something like this. Do you own Tesla? I do not own Tesla. I sold all my Tesla to buy more NVIDIA. But I was a long-term Tesla investor. I think their products are great. I think like the definition of a first principles thinker is Elon Musk. I don't think that there's a better example of a first principles thinker than Elon Musk. I honestly think, like, he obviously didn't pioneer it, but I think he's the greatest example of that in human history. That said, I think that there's other great companies, and I don't remember what part of the year it was whenever I did that. I'd have to go back. I made a video on the trade whenever I made it, but NVIDIA was extremely cheap, and Tesla was at a more expensive premium. I don't really think about Dutch Bros. I've never seen it. It's not here in Canada. I really want to keep my entire portfolio to tech. Really, two sectors, three sort of subsectors, which is like AI and software, and then blockchain and advertising. And really, you can just put that into AI and financial technology. Dutch Bros is, to my understanding, not those. So I'm trimming off everything that isn't that. Yeah, my biggest position's NVIDIA by far. I think right now, because it's selling off, it's under 40% of my portfolio. It's like 38%. But yeah, 38% or so is my NVIDIA position. Let's see. I'll check right now. 39.5% for NVIDIA. And then Shopify is my second biggest position. Then SoFi, my third. Then Hood and Nubank. That's my top 5. NVIDIA, Shopify, SoFi, Hood, and New. And now if you were to look at that on a cost basis, it would look a lot different. Nubank and Robinhood got way out of hand in how fast they accelerated in their price. Like I think I bought Hood at like 16. It was like hard to add to because we just took off. We went from 16 to 60 in what felt like a quarter or two, and then went from 60 down to 30, and then 30 right up to 130. Like it was just explosive. Very, very hard to accumulate during that time. Would you buy Nubank here? I think that you could absolutely buy Nubank here. I'm not buying Nubank here just because I'm just I'm just not adding to that right now. I don't want to build out. I say I don't want to build out my top 5 positions, but the only company that I am building out a top 5 position in, like I'm not adding to Hood, Nubank, Shopify, or NVIDIA, but I am adding to SoFi. That's the only one, because I honestly think companies get re-rated whenever you see an explosion in growth rate, and I don't see how that's going to not be the case for SoFi. SoFi is about to go into their strongest year. Like Hood's going to have very hard comps. SoFi has really easy comps. They have dilution. They have every single product is in their favor. I think if you were to say which company is going to grow faster in Q4, Hood or SoFi, I'm going to say SoFi. Adding to the wonderful fruit, say less. Steve, thank you so much. Donating $20 for me to buy Apple. I know what you're talking about, my friend. Thank you. I'll buy Apple stock. Put it in the community portfolio. Hood will double next year. I mean, it's possible, but we need a definite bull market to do that. Some people online, by the way, there are some accounts online I cannot stand. They spread misinformation. They have terrible ideas. Hopefully you guys are aligned on me with who I'm talking about. But some people think that Hood is dying and that their accounts are being lowered. That's the complete opposite. There's a rule in America called escheatment. And Robinhood ended up seeing 280,000 accounts that got hit with an escheatment rule, meaning that they're super low dollar accounts and they're not trading. They've just been completely inactive. Well, Robinhood cannot just sit on those accounts and count those as customers, or else they have to start charging those customers, and they don't want to do that. So they essentially tell those customers, hey, where would you like us to send their money? You're not trading here. So the fact that they were down month over month, 130,000 accounts means that they actually added 150,000 accounts. Okay, because the escheatment rule took away 280,000 new accounts. That's very important. So, yeah. How much have you collected for the new chair? I tried looking at some new chairs. I'm not sure. I've got a hard time. Someone sent me the Herman Miller Logitech chair or whatever, which looks like a good chair. But in Canadian dollars, it's like $3,000 plus shipping and taxes and everything. And I'm like, it's a chair. Like, I just can't do it. And then everyone goes like, you need to feel it. I'm like, you're telling me there's no other company that can make something for my back? I don't believe it. And also, I'm not buying a secret. I don't care what Steve has to say. I'm not buying that plywood piece of chair. I don't care. Putting a price on your back? Well, I'm no, bro. This is. Do you work for Herman Miller? How can you put a price on comfort? No, I'm putting a price on a chair because there's other companies that sell chairs. It's not like, oh, are you going to sit on a caveman boulder or are you going to sit on a Herman Miller? I've got other options that might be 99% good, but sell me a $600 chair. Go back to work. You need to sell more chairs. Yeah, you need an RGB LED gamer chair. So whenever I went to go buy my computer, they loaded it up with all these LEDs and everything. It's like one of those glass case. Like, it looks ridiculous if I were to turn it all on. And I downloaded this software that controls the LEDs just to turn them all off. So my super LED computer just looks like a black, like, glass case. I hate those types of products. And it's fine if you do, but I just don't like them. Tanner, it's a tax write-off. I feel like some of you guys don't know what tax write-offs mean. I still have to pay the money. It's not free, dude. It just means that I won't pay taxes on that item because those taxes will go, like, it's still a $3,000 chair. LED beanbag chair. Express investing. Don't waste your money on a stupid chair. Put this tenna in the vault. I was like, oh, what the heck? Thank you so much, brother. Appreciate that. Tanner, you can make your property a grave and get more tax write-offs. Okay, so I actually need some help. Let's be real. Okay, can we get into help Tanner with Canadian tax advice? Here, where I'm living, is my primary residence. I pay like I own the house. Okay, me and my girlfriend do. But it's my primary residence, which means that there's no capital gains if I were to sell this house. Okay. But I'm also hearing people say that I should turn my office and these sort of things into like sort of a workplace so then I can write off those expenses. But my understanding is that if you do that to the office and you say that this is part of your work, then it's no longer a primary residence. So like that portion of the house you'd have to pay capital gains on. And then it also just murkies up the whole tax situation. What do you think? Not a tax advisor. Yeah. What do we think? Get your girlfriend off title? Why? When are you looking to sell? Like next, I don't know, 2 years or something? I've already just realized that you just expand into the space so quickly. And I've just taken up all the space very quickly, and I already want more. I want to get like a really, really nice gym in my house. And right now, my entire gym's like in my basement, but also it's like not super high ceilings. It's probably like, I don't know, 8.5 feet, 9 feet, something like this. So I want to get like one of those like really nice, here, I'll show you guys. Also, let's double check the market so we're not missing any news. Let me see if anything's coming out. Bloomberg reports Elon Musk's X pulled in about $752 million of revenue in Q3 of 2025, up 17% year over year, taking the year-to-date sales past $2 billion. But they're still posting a loss of $577 million net loss as restructuring costs weighed. But looks like EBITDA was potentially still positive. Okay. Get an LLC by, well, yeah, I have a LLC for the business. Well, it's not an LLC. I don't think that's a Canadian thing. I think it's a, just a corporation or whatever. But yeah, I do have that. But I'm just worried about my own thing. Talk to a professional. Well, I appreciate that advice. But no, I'd just rather go to YouTube comment sections for my... No IRS agents needed here. I'm a Canadian. What are they going to do? The CRA needs to be in chat. Ask Gemini. I'm asking you, Matt. That means you go ask Gemini and then copy paste. Come on now. Yeah, that's what I got. Limited. I mean, you're kind of smart. Just read the tax code. Dude, it's not about that. I want to know which one's more. I think I already have my answer, which is just I'm not going to use my office as a write-off for the business. And I'm just going to, sort of take the tax in the corporation and then leave my home and business completely separated. What kind of business, Tanner? Doing what I'm doing right now. Media. YouTube. Okay. What's your eventual exit plan for BM&R? High conviction, but crypto winters are inevitable. Curious how you think about exiting this particular one. Well, I'm not sure that they're inevitable. I'm sure that Bitcoin is inevitable in terms of a 4-year cycle, but I don't know if Ethereum is. There's no reason for it to continuously sell off. That's been the way that it has historically been. But with the amount of, I think, Ethereum and crypto that's going to be put in retirement accounts, they're not going to be trading crypto winters. I think a larger and larger percent of the overall, ETH holders are going to be long-term, set it and forget it investors. Yeah, not really worried about the 4-year cycle on Ethereum or BM&R. Tanner, can I see your portfolio breakdown in percentage? Yes, if you are a course member. The growth investing course that I put out, which still gets new videos today. I think we uploaded one like a few days ago on... No, we did the culture one. We did when to sell stocks. There were a couple of ones that we just did in the last week or so. But yeah, that has my entire portfolio breakdown, all the percentages, everything I'm buying, all that stuff. But to the people that, have supported that, I want to give them as much value as possible. So I'm not putting that out. But anytime people ask me about my portfolio, I always talk about, percentages, everything. But if you want a live updated thing of everything I'm buying in real time, that's just for course members. Tanner, what's your address? Okay. Okay. I was going to... Oh, no, I was going to talk to you guys about gym equipment. I want one of these. Here, wait, I'll show you what I'm getting next. But I think I'm going to have to put it in my garage just because my basement, I don't think is going to be tall enough. They have a short version, but then I think it kind of takes away from some of the features. But guys, if you guys are looking into getting into gym equipment, obviously we've got a new year coming. Some of you guys have, like a real want to get fit and everything. You want to do that at home. Get yourselves a functional trainer. Don't get a Bowflex or something like this. They're absolutely crap. You need a functional trainer. So something like this is all right. Let me turn off dark mode. Something like this is really good. This is Rogue. It's one thing. You can do everything, ladies and gentlemen. Everything. I got no promo code. I got no relationship with Rogue. It's just they are the greatest company in ever. But essentially, this is what you want. Or you can get ones with the actual weight stacks, so then you don't have to, load it every single time. But you can do everything. Seated row, pull downs. You can set up to do squats, bench, everything. All you would need is a bar, weights, and a bench, and it will do everything. Excluding some, bro, they're like 1K on Temu. Yeah, but you're going to get Temu quality. Rogue is top notch. There you go. David says so. That one in Canadian is about $7,000, and it's not even the one that I think I would get. I think the one that well, it's Canadian dollars as well, so you have to adjust. It would be a lot cheaper for you guys. But I think the Aries, which is the, my favorite, Aries 2. Where is it? Is really freaking exciting. But I can't buy it right now because it's too tall for my basement. So I'm gonna have to figure out, get that stuff to the garage. Make it a business expense. What are you, the CRA? Tanner's max bench gotta be like 95 pounds. You're close. So if we got a 45-pound bar, 2 5s on each side, yeah, 55. Work out in the great outdoors like Rocky. Tell them about your shoulder injury. I got hurt when I was younger, and then ever since, it's just never. I have to get surgery. That's the thing. I've gotten told that I need to get surgery. I probably have something ripped in my shoulder. I never went and got it fixed. So I have to hang every single day just to make sure that the muscles around my shoulder are nice and put in place. But it really limits the mobility of some of the exercises that I can do. Question. I have 32 shares of Tesla at 155.31. Should I sell to invest in something else that I own more of, or let it sit? It depends on if you believe in the future of Tesla. If Robotaxi and Optimus are going to take you to the moon. By the way, if Elon gets the pay package that he's hoping for, which might even be tying in with SpaceX and Grok and all the companies that he's worked towards, if he can get that to $8.5 trillion market cap, he gets his $1 trillion. You get that along the way as well. So I don't want to take away from your investment. What was your original reason for buying it? What got you to buy it in the first place, and has that changed? Look up Squat University. They can help you with your shoulder injury and the correct workouts to strengthen that. All right. I was doing physio for a while and a lot of resistant band stuff, but honestly, I'm just too lazy for that. Santa Claus rally. Will we get it this year? I'm hopeful, but I think there's so much pessimism on this AI trade, even though I think it should be this is what's so funny. How we have this sort of, talking out of both sides is hey, we're priced for perfection, and this is an AI bubble. And then in the next breath, you actually look at the multiples versus the .com bubble, and you're like, okay, we're not even remotely close. Like, I don't know. There's so much left to go there. Let's all raise $3,000 for a new chair for Tanner. Thanks for your good work. Well, please do not do that. I have $3,000. You don't need to raise $3,000. If you guys gave me $3,000, I promise you I'm not going to buy a chair with it. I have $3,000. You guys are good. I don't want to spend that on a chair. Yeah. Breaststroke will help with your shoulder. Yeah, but that involves me getting into a pool. If it's ripped cartilage, it could cause arthritis. I don't know. Yeah. Is Tanner turning this channel into a workout channel? Well, I mean, a little bit. I definitely want to. Like, if I had the gall, the absolute balls that Steven Fiorillo does, just bringing chefs onto his channel and stuff, I would absolutely just interview health and fitness guys half of the time. So I just like delayed gratification in general. I think that they go hand in hand. You know? Okay. Health and wealth. I can swim. I can swim. Don't you worry. Getting your shoulder sorted later is horrible, real nasty. You want me to call Steve? We can see if he answers. It's kind of in the middle of the day. He's probably busy. But we can give it a try. Can recommend surgery right away. I mean, it's like my girlfriend sent you. I don't want to. Hello.
What's going on?
I'm live right now. What are you up to?
I just closed the door to my office because there's a ton of people in the hallway.
Yeah, I know. It sounded like you were being quiet on me there for a second.
Yeah, what's going on?
I'm curious what the heck the market's doing right now.
What, are you shook?
I'm a little shook. What should I be buying?
When the hell did you get paper hands?
I'm not selling anything, but boy, oh boy, am I shaking. What's going on?
You just said you're shook.
Yeah, so are you buying the dip? Are we getting into Broadcom? Are we getting into Oracle?
No, we're not. No. In fact, I just bought Chevron, and I'm in a different account right now, and I'm buying more BMNR.
More BMNR.
Yeah, because I'm going to be nice. You like your stream to be PG, so I'm going to be nice.
I appreciate that.
You know, we're gonna be like Dalton. We're going to be nice. Do you know what movie that's from, sir?
I feel like you're going to swear if I say no.
I may throw my phone into a computer screen. You really don't know who Dalton's from? It'd be nice.
Maybe not. Give me a hint.
Chat definitely knows.
What's it from?
The name has house in it.
Animal House.
Roadhouse.
I haven't seen Roadhouse.
You've never seen Roadhouse in Patrick's Place?
No, but you know what? You know what I did do yesterday? I watched Good Will Hunting, and boy, oh boy, could you be?
Who cares about?
You couldn't be more wrong, dude. It's the.
Oh my god, the movie's so.
It's
bad.
a perfect movie.
Oh my god.
I couldn't.
God, this younger generation's getting soft on me.
I think that's honestly why you don't like it. I think if you were born anywhere other than New York, you would have loved it. But somewhere in you don't let emotions allow you to enjoy a movie. It's not your fault.
Of course.
It's not your fault. It's not your fault. You know what I'm saying? That's a beautiful moment in movie history.
Just like people who think Forrest Gump was a good movie, horrible movie, waste of time. Anyway, don't be shook. I'm coming after every AI bear this weekend. A 2,000 or 3,000 word post is going to go out on X, going after everybody. I put everybody on notice. You're going to get the fire. This is the most ridiculous thing ever. And I predicted that Oracle could send the bears into a frenzy because their CapEx was going to explode without cash from operations following. They're going to add debt. Now you have the new city note saying that they're going to tap the debt markets in the tune of 20 to 30 billion a year, and they may end up having 180 to 200 billion of long-term down the balance sheet over the next 3 years. And now you have the freaking AI narrative coming under fire again. It's stupid, and honestly, right now, if NVIDIA keeps going down, I'm buying more NVIDIA.
I mean, how much lower? When do you start buying back in?
Because of how big of a position I personally have, it would have to go under 170 for me to start adding.
Yeah, I think I would even start adding. Like we see like a 165 on NVIDIA. Like what would the market even be thinking?
It would just be insane. I mean, I'm sorry, but do we really think that all of these CEOs, these are the CEOs of the largest companies in the world. These are the CEOs that are shaping the future of technology. Who the hell is any bear near you to say that they're wrong? Like, if this was one of them going off the reservation, okay, they're acting a little crazy. But it's all of them. And the RPO is insane. I mean, Oracle came out with more backlog than Microsoft. Microsoft was 396 and Oracle's was 592. I mean, the RPO is absolutely insane.
Yeah, yeah.
So for anybody to say that this isn't real is crazy. Now, Oracle should have never gone to where it got to. Broadcom should have never gone where it got to. Their valuations and them selling off means nothing for NVIDIA, for Amazon, for Alphabet, or for Microsoft. And here's the biggest thing. Anybody who listened to those conference calls, all roads lead back to NVIDIA. And Oracle's earnings call showed us that this build-out is nowhere near done, and they're going to need every last chip from NVIDIA. Same with everybody else. So the fact that NVIDIA is not over 200 right now, it's breaking my brain. It doesn't make sense.
I think that's a great way to put it, dude. It's yeah, it's blowing my mind. I see a bunch of comments trying to trigger me saying Google's going to eat NVIDIA's lunch. I just
They're not. They're not.
They're gonna benefit, but it's not going to be, you know.
Here's the thing. I'm a shareholder in both. My position in NVIDIA is significantly bigger than Alphabet, but I'm a shareholder of both. So it doesn't benefit me really to say anything bearish or bullish on one versus the other. TPUs are not replacing GPUs. TPUs are going to help Alphabet the same way it's going to help Amazon with aggregating specific workloads. And it's going to make their data centers more efficient. They still need all the horsepower from NVIDIA's chips. That's not changing. These TPUs are not a replacement. They're an augmentation after they've already done all their training and efforts.
What else are you buying? I bought Nebius today.
I bought Chevron and BMNR.
You're not going to nibble on Nebius?
Hold on.
You take that. I'll let you go. Gotta love them. All right. Once again, we went over our time, ladies and gentlemen. It's a quieter day. It's Friday. You know, we're not going to see too many new things. However, JP Morgan's Jamie Dimon said Kevin Warsh would make a great Fed chair. Hassett most likely is going to cut rates, however. Most likely to cut rates. Kevin Warsh is would be a great Fed chair. Putting his word in. So, ladies and gentlemen, we went a little over the time. However, Friday, it's the end of the week. Enjoy yourselves. If you guys want some more stock talk, you know, we have our Friday night FinTech Friday show, which will be at 10 p.m. tonight, along with, you know, some other creators like Steve and Roy and Tevis. Talk about everything that's been happening on Chime and SoFi and all of these names. I got hiccups. But that's essentially it. Any last questions? Let's see. No. Is Steven buying the Costco dip? He does not do that. All right. Then, ladies and gentlemen, we'll see you guys next time. Bye for now.